Right, let's get things going. Steve, thank you so much for joining us, particularly in evening your time.
Thanks for having me. Excited to be here.
Just to say a little bit about Haseeb's background, because it's a very eclectic and brilliant background. He started out, well, I have to say started out in two ways. He was a student originally at the University of Texas in Austin. From a very early age, he was a very good poker player, which we're definitely going to delve into, to quite some success. I know we also have some poker players, students in the crowd today who want to kind of get into that a bit, but went to a lot of claim with his poker. I did extremely well. I don't know how you did that alongside studying, but I think it would probably take a little bit of balancing. He then became a kind of developer and also kind of coach and educator, going on to kind of also work at Airbnb for a year before and earn.com before becoming I've skipped a few steps here, but becoming a general partner at Metastable Capital, who are an investor into the space, and most recently, as of last year, as of 2 years ago, I'm getting my years a little bit wrong, as a managing partner at Dragonfly Capital, which is one of, quite frankly, one of the best investors in the space, have invested in many projects you will have heard of, that I'm sure we're going to get into today. So Haseeb, thank you so much for being here today.
Well, thank you for that very generous, possibly excessively generous introduction. Happy to go into any of that.
I think that's a British thing, to be honest. We are excessively generous with everything we do.
Well, I appreciate it. It's very kind.
Awesome. So guys, just a reminder on style, a few questions for me to get the conversation started, then over to you. Please use chat. Please use the raise your hand function if you want to ask kind of face to face. Don't be shy. And otherwise, I kind of want to get things started. As I said, normally I start with people's university career, but I think we actually have to go a little bit before that with you, Haseeb. So age 16, you're getting into poker. You start with $50. I've read the stories, but I want you to tell them yourself. Tell me about how you got into that, because it's not a normal thing for a 16-year-old to do, to think, you know what, I'm going to be a good poker player. So please tell us more.
Yeah. So it was very much not intentional, so to speak. I didn't go as a young person, I did not have any ambition of becoming a professional poker player. What ended up happening was, as a relatively young man, I was pretty bored, and I was going through school and not particularly not super engaged, and I enjoyed playing games. And I remember at one point, some friends of mine had invited me to play some poker with them, and I'd never really played poker before. I played like some 5-card stud with my cousins, like without any money involved, but I never really played poker. And so I remember I sat down with them, and we played a game of Texas Hold'em with chips, and I'd never dealt with chips before. That was a new concept to me. And then things like calling and raising and folding and all this stuff, I just didn't really understand what was going on. And I remember I lost all my chips very quickly, and I felt very stupid, and felt very, which is a feeling you commonly have when you're young. You feel very immature. You feel like, okay, I'm not enough of a man to know how to play poker. And so feeling very frustrated, I remember going back to my computer and like looking up the rules. How do I play poker? I don't want to be embarrassed again next time that my friends invite me to play poker. And I ended up reading this article that described, at the time, this was like 2006, 2007. I remember reading this article that described this new generation of poker players who are all these young cats who were in college and using statistics and game theory to outsmart the old guard of professional poker players who kind of grew up in like the card rooms in London and Vegas and Dallas and whatever. And I was like, I bet I could do that. I think I'm a pretty smart guy. So at the time I started, I was underage. I was 16 years old, didn't have any money, obviously. And so I started playing some of the play money games online, just trying it out, just trying to see if I could understand some stuff, reading some stuff online, some very basic primers on strategy. And I got to the point where I was like, okay, I think I can do this. So I called up my older brother. He was 18 at the time. And I asked him like, hey, I'm practicing this poker thing. I think I can do it. Can you give me $50 so I can get started playing poker? And he was like, what? He was in college at the time. He was like, what? You're gambling? What are you doing? You're supposed to be in school. Like, what's going on? Don't ever tell anybody about this. Just stop. Don't play poker. You're an idiot. And I was like, all right, screw him. And so what ended up happening was I went online. At the time, there was the biggest poker website was one called Party Poker. This is super fucking old. Sorry, my line to curse. It was a very, very long time ago. They didn't have very different generation of poker sites back then. Anyway, Party Poker had this promotion they were running where if you scanned in your driver's license, they would give you $50 for free as like an incentive to get you to start gambling. And so I didn't have a driver's license. I wasn't a very cool 16-year-old. But this is in the early days of Google image search, where it was relatively easy to just find an uncensored driver's license that somebody else had. And so I found the first image of a driver's license, which was some little old lady from Maryland. And I sent that in, and that was my only $50 that I had to my name. I had no other way of depositing any more money. So using that $50, I very, very slowly ground my way up, starting at the 5-cent, 10-cent games and the 10-cent, 25-cent games, working my way up until I think I started in February, and then by summer I turned $50 into $2,000, and then by the end of the first year I turned that $50 into $100,000, and from there my poker career just sort of took off on its own. It was the very early days of online poker, where just being smart and being at the forefront of this revolution that was going on in poker strategy, you could make a lot of money. And I within a couple of years, by the time I was 19, I was ranked one of the top 10 online no limit hold'em players in the world. So it was a very strange episode of my life. And it was, I did that for about 5 years. I ended up dropping out of school at some point to pursue it. And then by the time I was 21, I decided to leave poker entirely and go back to school, which is, a whole nother story that, has its own strange arc to it. But
I just wanted to ask that.
Yeah, go ahead.
Go.
I'm just going to say, when I left university, which I know most people listening are in university now. When I left university, I really had no idea what I wanted out of university. University felt, at the time, to me, I was very disillusioned with academics. I was studying philosophy at the time, and I ended up graduating actually with a degree in English with a minor in philosophy. So nothing technical at all, just no real meaningful real world application to anything I was learning in school. But I ended up finding my way eventually into technology and eventually working as a software engineer. So if there's any lesson to be drawn from my career, which I'm not sure how much directly you want to emulate what I did, it's probably not a great idea. But the one lesson I'd say that I kind of walk away from university is that the important thing about university is actually not the object level stuff that you're learning. It's about the sort of meta skills that you develop while you're in university. And those meta skills are incredibly, incredibly valuable in almost everything that you do. But most of the object level skills that you learn of like, okay, how do I, analyze the classics, or how do I, I don't know, pass this civics exam? Most of those object level skills, you're one, going to forget, and two, even if you did remember them, they wouldn't be of much use to you in most of the rest of the world.
And what would you say are the most valuable meta level skills? And can you learn them intentionally, or do they come along the way without you even trying, and you shouldn't really optimize for them?
That's a good question. I'd say one very important meta level skill, one very important meta skill, one is learning how to learn things. I think a lot of people go through university and they don't actually learn how to learn things. They basically let the learning happen to them. And it's very easy to identify this because the kinds of people who are really good at learning just go out and they just consume things. And they're able to, poker was a perfect training ground for this, because being a poker player, especially in the, in the late aughts, there was very little educational materials out there for somebody trying to learn poker. There was some stuff, but it was mostly low quality. And so if you wanted to learn poker, you really had to do it yourself. You really had to do it on your own, piecing together very disparate sources of information, constantly testing and quizzing yourself. There were no boot camps, there were no frameworks, there were no courses. It was very much, you had to be very self-determined in figuring out how you were going to learn this craft. And today, the modern university doesn't intentionally teach the skill. Instead, it's sort of, it's very happy to let people kind of work backwards from the test. And in the real world, there's no such thing as working backwards from the test, right? If you're an investor, or you're trying to run a startup, or you're trying to, do sales or whatever, there's no test you can cheat. There's only, did you accomplish the thing or not? And if you can't accomplish the thing, there's nobody to convince, there's nobody to bullshit, there's no test that you can practice on. You just have to get good at this raw skill. in an environment where often nobody is really there to hold your hand. And the more that you do that, the more that you find opportunities to do that in university, the better you're going to become at everything else you do in your life. So I would say the two real meta skills I would say that are very, very important. That's if you're going to get anything in school, optimize for learning these two skills. One is learning how to learn things. And second would be basically learning how to interact with people of very different environments. That is an extremely valuable part of school and of the university environment. And especially so if you can learn to take social risks while you're in university. It's the easiest and safest place to do it. But if you don't learn that skill in university, it's very hard to acquire it later. So I'd say, the two things, learn a lot and learn stuff that you're not necessarily being tested on, and also take lots of social risks.
And just kind of touching on that, because I think you've really hit on something I get asked, and I know a lot of students have at the forefront of their mind is, okay, what is the point at university? What is the point of this thing that actually in an object level seems quite useless? I mean, I also did philosophy, and also I like quoting Aristotle. It's quite useful to my moral ethics system. So here's the question: do you think universities should teach this stuff, or part of the actually creating a well-rounded and a determined person is not necessarily teaching this stuff and letting them figure out for themselves in the environment they're in? Yes, is this kind of, should this be kind of less more tacit than kind of specifically taught?
That's a good question. I mean, it gets into a very long subject that I don't want to go too far off the rails on. But what I would say very briefly is that I think universities are designed for teaching very narrow and constrained skills. If you want to be a civil engineer, the university is the right program for teaching you that particular skill. If you want to be an accountant, the university is the right program for teaching you that kind of skill. If you want to be an entrepreneur, if you want to be an investor, university is the completely wrong environment to learn that kind of skill. And increasingly, we're moving into a world where those kinds of skills, decision-making under uncertainty, are becoming more and more valuable on a relative basis. And the reason why those skills are becoming more and more valuable is because everything else is actually, if you can learn it in an algorithmic, very structured way, so can a computer. So, any kind of skill like accounting that is just relatively rote and mechanical is becoming less and less valuable over time. And that trend line is only going to accelerate. And so the kinds of skills that you should try to develop in university, if you want skills that are basically timeless and always valuable, it's making difficult decisions under uncertainty. And that's what entrepreneurs get paid to do. That's what investors get paid to do. That's what CEOs get paid to do. And so that's the kind of skill set, if that's what you're optimizing for, which doesn't necessarily have to be. If you want to develop that kind of skill set, the standard track university environment is not the right venue for that. Now, how do you train those things? That's a really tough question. Traditionally, the answer is you do things. You actually do take on risk. You actually do take on responsibilities, and you mess up, and you learn the hard way, the cost of misreading your own uncertainty about things. But in a way, that's what actually the best universities, like if you look at what happens at Stanford or Harvard or Berkeley or whatever, it's very easy to mistake what's happening there as being, the classes are better, or the universities are better, or they have more chairs in or the teacher ratio is different. I don't think that's really what is making those universities better. I think what makes them better is that, one, your colleagues there are more ambitious, and they will push you, and you will be pushed to emulate them in your own risk-taking. And second, is I think there are just many more opportunities for you to take on amorphous risks and responsibilities at places like that, because there are just more resources to put behind them. Whereas at a less resourced university, people just show up to classes and they go home, and there's not a lot else that happens there. So anyway, absolutely. I don't want to derail the conversation too much in that direction, though.
Let's bring it back to message, because I think we can build on this to something that is linked to crypto. So let's take crypto investing. So you clearly have a fantastic understanding of mathematics, a fantastic understanding of reading people and heuristics and soft skills. What is the interplay between those and kind of investing into crypto? How do they apply? Do they not apply? Or how does that influence your approach to crypto investing?
That's a good question. So I'd say on a relative basis, I actually don't think I'm that great at either of those two things you mentioned. And in general, I would also say that most of the professional poker players I know, the really world-class poker players, I don't think they're actually very good at investing, even though I think many of them are very, very good at math, and many of them are very good at reading people, at least at a certain level. Investing is very much a different beast. And part of the reason why I think it's quite different is that poker is very, very microscopic. It's all about, you know, this hand, this particular flop, these particular cards, this particular betting amount. Whereas investing is, there are two, what do I want to say? Yeah, investing is much more macro in that sense. There are micro elements to investing, such as, okay, this entrepreneur, this particular market, this particular protocol, this particular design. But in general, it requires a lot more macro thinking than things like, you know, I call it poker or chess, which are very, very kind of microscopic. And I think that skill set is rare to coincide with the same skills that make you good at the microscopic. So I don't think you actually need to be amazing at math, or for that matter, amazing at reading people to be good at investing. I think the skills that it takes to be good at investing are, one, to be able to, I mean, sort of like I said, to be able to build mental models in very, very large domains of uncertainty. Generally speaking, the way to understand investing is that there are four kinds of investments. There is non-consensus wrong, meaning that nobody agrees with you and you're wrong, right? So if you think that, you know, that we are going to have, you know, nuclear fusion tomorrow, right? Nobody agrees with you and you're wrong, so you're just going to waste money. If you invest in somebody who tells you they're going to do nuclear fusion tomorrow. Then there's non-consensus, then there's consensus wrong, which is that everybody thinks that this thing is going to happen. So for example, you know, VR in the 90s, everyone was convinced in the 90s that VR was just around the corner. Everyone was investing in all these VR companies and they all flopped because of course none of the tech was ready. So that's consensus wrong. Then there's consensus right, where you think something is true and so does everybody else. And as an investor, you actually don't make any money when you're consensus right. Because if you're consensus right, then everybody agrees that this thing is the next thing. They all bid up the price. And therefore, because the price is appropriately high, nobody actually makes very much money from investing in this thing because the price has been bid up to an appropriate price level or even an overly expensive price level. The only way you make money as an investor is to be non-consensus right, meaning that you are right and nobody else agrees with you. And the kind of skill set that it takes to do that is substantively different. And it requires a certain kind of constitution. I think you have to be very, very confident in your ability to make decisions. You have to be able to notice when you're wrong. You have to be able to change your mind very quickly when you're given new information about something. And you have to be comfortable with uncertainty. You know, those I'd say would be the big meta skills. And there's a lot of stuff about just being nice to people and being friendly and whatever. But I'll offer one more framework to think about investing, is that at bottom, investing is a really simple job. You know, there are two things you have to do. You have to find good deals and you have to invest in them. You know, or I should say rather, you have to pick good deals and you have to invest in them. So picking is, there are multiple parts within picking, which is one, you have to first see the deal. And second is you have to choose the deal, right? So seeing the deal is called deal flow. That basically means, you know, do people want to, if they're raising money for a new company, do they even want to talk to you? They don't want to talk to you, you never even get to see it. But if you see it and you don't realize that it's a compelling investment, you may not decide to do it. And that's your judgment. So there's deal flow and there's judgment, which goes into picking. And then there's actually investing in the deal, which has to do with winning allocation. And that has to do with you building a relationship with an entrepreneur, them believing that it's worthwhile to give you allocation in their round. There are a lot of people who see a lot of deals and they don't get to invest because the entrepreneur is like, well, look, I'd rather take Andreessen's money than your money, or Polychain's money than your money, or, you know, et cetera, or and sometimes in our case, Dragonfly's money instead of your money. So that really requires you to build a brand, to build relationships, to prove your value to people, and to just be oriented towards service and helping other people. If you can do that, if you can combine those two skills, then you're going to kill it in investing.
Absolutely. Right, guys, please do raise your hands if you kind of want to ask live questions. We've got some written ones coming. I'm going to ask one more and then we're going to hand over to you guys because I'm quite deep in this discussion now. So I want to ask one more question, kind of linked to everything, investing, what you've said before, which is kind of the role of ego in crypto. I feel like maybe it's my naivety from only really ever being in crypto, but it seems like ego is a big thing, and certainly masculinity in crypto is a kind of big thing. And we often get founders who succeed incredibly well, both financially in terms of reputation at an incredibly young age, perhaps younger than even kind of traditional Silicon Valley startups. You were someone who achieved a lot at a young age and went back and kind of taught himself, went back to university, did the basics again, kind of invested a lot in yourself. How do you separate the founders who kind of just are very smart but kind of lucked into their success and you're not sure if this will repeat into the future, and go on to keep building great companies and great protocols, versus the ones that you can see actually are driven in self-development and are good long-term bets? If we are investing in people here, these are the people who invest in. How do you separate the kind of person from the the very good protocol they've built, but maybe might not have the capacity to keep building it to the scale it needs to be?
Yeah, that's a very tough question. It's hard to have a pithy general answer to that.
Yeah, I've screwed you over there, but as best.
No, it's okay. It's okay. I think the way I'd answer that is, one, you need to look at the process. What is the process that this entrepreneur goes through or uses in order to build, to develop an organization, to scale themselves, to scale their idea? You want to make sure you're looking at the process and not just at, so to speak, the level, right? Like, what is this thing right now? And what is the process that made it here? And what is the process that's going to continue running when this person sort of continues that equilibrium? Some people, you can see from their process that it's very repeatable. What they do, as long as they keep doing it, this engine is going to drive them to further and further heights. And there are some people you can see their process arriving at this level of success was basically random. Now, that doesn't necessarily mean that even if this entrepreneur is not amazing, that this thing is not investable. There are times when there are good reasons to invest. For example, the whole point of a protocol, of course, that eventually scales past the people who founded it. And so the process that you need to be interrogating sometimes is not the process of the person, but the process of the machine that the person built, right? And that ultimately is what organizations are, whether they're centralized organizations or decentralized ones. As an investor, you need to underwrite what is the process by which this DAO or this company or this individual makes the decisions that they make. If it's a seed or a pre-seed investment, then it's really about the individual. But if it's a later stage or ultimately a very mature protocol, then very often it rises far above any individual person and becomes this meta process that you're trying to underwrite.
Okay, fantastic. Right, should we go on to some questions from the audience? Because let's first of all go to Cape Town, to Mbong Engi, who is going to ask the first question. He leads the Google Developer Club at the University of Cape Town. Over to you, sir.
All right, am I coming through?
You are indeed.
Yes, can hear you.
Great. Well, hi everyone. I'm coming through from sunny South Africa, Cape Town, as Anthony mentioned. And I have a pretty kind of broad question, Haseeb. And basically, I just wanted to ask that in a setting like Africa or emerging markets in general, do you think that blockchain / crypto ventures should be more focused on kind of shared value business models, especially with the whole idea of entrepreneurship for the common good and, corporate social responsibility, those kind of themes? Do you think that businesses should be focused on those kind of shared value business models? Or do you think it's necessary for crypto / blockchain ventures to just stick to the traditional maximize profit, move forward kind of way of thinking?
That's a very, very broad question. So are you thinking about sort of traditional businesses? Are you thinking about protocols, or what do you have in mind when you ask that question?
So I mean, kind of just I guess you could say protocols as well, but I was thinking of business ventures in particular. I have one in mind called Zalto. I have no idea if you've heard of it, but basically it's a cryptocurrency platform that's founded on the idea that young people can go out and do tasks that are needed by kind of people in the community, and they receive some kind of payment in crypto.
I see.
So I was just thinking in kind of businesses that operate like that, should they be focusing on creating as much value as possible for these users / consumers, or as an investor, is it just about profit at the end of the day?
Yeah. So my answer is kind of both. The answer is both. And the reason why I say both is that very often, I mean, more often than not, and I think people are becoming increasingly aware of this these days, when you have a venture that's solely motivated by basically a relatively abstract notion of social good, most of the time it totally fails. And everybody knows like 1,000 examples of very, very well-meaning projects that have basically managed to produce nothing valuable. And most of the things that have actually been world scale impactful have been for-profit enterprises that are, one way or another, they're guided by relatively clear signposts of, are we actually providing value, at least for the people who are using our products, right? Now, there are for-profit businesses that have significant negative externalities that, by virtue of them providing some value to some people, they harm other people who are not directly their customers. And those things are difficult to manage, they're problematic, and they generally require governments to get involved in order to offset or regulate those externalities. But I think in general, there's something very, very clarifying about having to actually prove every step of the way that you are doing something valuable. If you are a for-profit company, you do not get any leeway in providing value to people. If you don't provide value, you're done. You never scale up. You never even get off the ground, right? It's like nobody waters you the second day if you're a for-profit plant. If you're a nonprofit plant, then you basically get showered with accolades and with invitations to go speak at places and blah, blah, blah. And I think we're all sort of familiar of examples of this kind of thing. But it's very, very hard to actually change things. It's very hard to actually know, am I really making an impact? And so I tend to think that the companies that I'm aware of that have actually had the most positive impact tended to be the ones that were some combination of both. That they were guided by the clear principle of, look, if I'm providing people value, they will be willing to pay me for it. And the clearest sign that I'm not providing anyone value is that no one's willing to pay me for anything. But secondarily, I don't want the primary animating principle of this company to just be extracting that value, right? But instead to take some of the value that I've gotten back and to distribute it to other people as a part of this community or part of this culture or industry or whatever it is. And so, there are companies that come to mind, like something like Wave Financial, which I know does operate in Africa. There's exactly this kind of model where they make money offering a remittance service, and then they actually use that money, the capital that they generate, in order to do good things. And this model feels to me much more sustainable than some of the other enterprises that are purely nonprofit motivated, but don't have that North Star of really knowing for certain, are we actually helping or not? That'd be my answer.
Awesome. Great question. Thank you very much. And also you win the prize for the best background I've seen. Like,
yeah, that was absolutely amazing.
It always wins. Can I tell you, whenever there are these big calls and things like that, it always wins. Sunny South Africa, you can't beat it.
You can't beat it.
Thank you so much, Haseeb, for the answer to the question. That's
my pleasure.
Answered everything. Perfect. Thank you.
Awesome. Thank you very much. Right. George is going to read out some of the chat questions. So over to you, George.
Yes. So we have the first one here from Hon, who asks, are NFTs the latest speculative craze, or do you think there's actual value in them in their current form?
Yes and yes. So NFTs are definitely a speculative craze right now. I mean, look around you, look in your heart of hearts. Like, does this look like a speculative craze to you? Like, probably, you should trust your instinct when it comes to identifying speculative crazes. Now, that said, the embedded question is like, okay, is there a there? And I think the answer is also yes. It's pretty clear that, if you ask people who are in their, call it 40s or 50s, you say, hey, there's like some online, basketball trading card game where a 10-minute or 10-second video clip of LeBron James making a dunk is, selling for $100,000. But you could just go watch this clip on YouTube if you wanted to. But instead, if you own this thing on this platform, it's $10,000 or $100,000. I think they would tell you like, okay, people have gone mad. They're bored at home. They've gotten 2 big stimulus checks. Something's going wrong. This is a sign of social upheaval. But if you ask somebody who is, in their 20s or somebody even younger than that, the idea that there should be the idea of like, physical trading cards, like what we had, when I was a kid, they're like, why would somebody have physical trading cards? Like everybody lives on the internet now. Like everything's digital. Why on earth would this kind of apparatus not be 100% digital? Why would there not be a digital titling system for bragging rights over one-time issued physical goods that represent some moment in time or some person or whatever? Like clearly that concept has existed forever. And before it was, limited run, physical cards made out of, cardboard and laminate. And now it's all digital. Why shouldn't it be digital? So to me, there's clearly a sense in which, oh yeah, of course this is going to be where the world goes. Of course this is going to be, whatever impulse was inclining people to collect, stupid cardboard cards. And I mean, I'm not saying they're literally stupid, but from some sense, somebody who doesn't buy it, they look pretty stupid. It's the same way in which NFTs look really stupid. Now that being said, I think when you see that there's much more, when you see people who think that if they buy NFTs, they will automatically make money, that is a sign that we're in a speculative craze, right? Normally, there are always baseball cards. There are always collectibles. There's always rare coins. There's always art, but normally people don't think if I buy this, I'll magically make money. So that feeling that you notice in the air around you, that people think that if they buy NFTs, they'll magically make money, that's the sign we're in a speculative craze. Once that goes away, then you'll be able to see the base rate of who actually likes this stuff. And the answer is like, there are actually a lot of people who like this stuff. There are a lot of people who will care about this. There are a lot of people who will want to brag on their Twitter about the baseball cards they own, or the basketball, the NBA Top Shots, or the hash mask, or the whatever. It's not everyone though. Right now, there are a lot of tourists who don't actually care about this stuff. And when they leave, we'll actually have a clear sense of who today is on the train. And slowly over time, I think more and more people will, once they figure out what is the right way to feature your ownership over the assets that you digitally own. Right now, we don't have a good answer to that, right? Like, not that many people are on NBA Top Shots. Not that many people know, do you own an NBA Top Shot? Like, I wouldn't even know how to, if I want to brag to one of my friends, like, they're like, what the hell is an NBA Top Shot? How do I even see this? So, you can imagine someday there will be some way to see it on your Facebook or your Twitter account or your, whatever that digital third space ends up becoming, whether it be some VR universe or something else, some metaverse social network, where I'll be able to see, oh, these are all the NFTs that you own. You'll be able to selectively show a certain one of your friends, or like bring out of your private trophy case to like show me, oh, check this out, I've got this crazy, limited edition thing. I can't believe I splurged on this. I don't want to tell everybody about it. Someday there are going to be that kind of social infrastructure, but we don't really have it today. So, convoluted answer, but that's my take on NFTs.
Awesome, thank you. Yeah, that reminds me of something I saw over the weekend where there's a big YouTuber, Logan Paul, bought some like first edition Pokemon packs, opened them on stream, and then sold the NFT, the clips of opening on stream as NFTs, and they each went for like 10 grand. So yeah, that's pretty bubbly to me. So just one more from the chat before we go back to the live questions. We have Robbo, who's asked around the current Ethereum situation. Is ETH being kind of seriously challenged as a layer one? And what are your thoughts on optimism as a layer two to hopefully solve some of the current challenges?
Is ETH being challenged as a layer one? I mean, ETH has always been challenged. Yeah. If you're the king, everybody is jockeying for your throne, whether they're saying it or not. So it's certainly the case that for the last 4 years, Ethereum has been continually under challenge. But so far, it's staved off everybody. So right now, although it sometimes hurts me to say because I've invested in many of the people who are coming at the throne, so far Ethereum is winning, and it doesn't really show any signs of that dominance receding. And people sometimes point to Binance Smart Chain or Tron or EOS or whatever, and on a relative basis, all these things are tiny, 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 tiny compared to Ethereum and its market share. So it's just sort of a matter of fact today that Ethereum is basically what Windows was in, call it, 2005. It is just the overwhelmingly dominant operating system for blockchains today. And it's going to take a lot of work to unseat it. Now, on optimism as a layer two, so I'm a big proponent of layer two. I'm actually, I should disclose that I'm an investor in one of Optimism's competitors called Matter Labs. which is doing a ZK rollup. Optimism is an optimistic rollup. These are two different models for building a trustless layer 2. In general, I mean, the Optimism team is great. Super, super strong people, and they've built a really strong brand and following for themselves in the Ethereum community. Optimistic rollups have their issues. There are some problems around withdrawal times and liquidity issues that are going to be challenging for them to overcome. That being said, they have a faster path to offering generalized smart contracts on optimistic rollups versus ZK rollups. However, we are seeing in ZK rollups over the last 3 years, basically a Moore's law-like trajectory, in that every year ZK rollups or ZK proofs, zero-knowledge proofs, are just getting better and better and better at an exponential rate. So if you compare where the state of the art was 3 years ago to where it is today, it is absolute night and day. And I expect this trajectory to continue as more and more, basically more and more dollars and more attention need is driven into the problem of scaling these zero-knowledge proofs. And so the reason why I'm very bullish on ZK rollups is basically, optimistic rollups are fairly well understood and their performance is quite bounded in the sense that you can't really make them much better. There isn't really much theory of how you can prove the model beyond what is currently understood. Whereas ZK rollups, zero-knowledge proofs just keep getting better. And it's very scary to bet against technology, especially technology that's rapidly improving. So my take is that I think in the future, call it 2 or 3 years from now, it's going to be a slam dunk that zero-knowledge proofs are going to be a better architecture for scaling layer 2s and scaling computation. I think right now it's fairly close, and I think optimistic rollups have a slight lead with respect to the current execution of smart contracts. But I think that gap's going to close pretty quickly, and after it closes, I think it's going to become a very large gulf in the other direction. How long it's going to take, though, I don't know.
Awesome, thank you very much. I'll hand to Anthony for some more of the live questions.
Yeah, they're stacking up. Right, let's go to Vijay, who just won with the Flashstones platform, the Binance Smart Chain and Avalanche prizes in the hack that finished last week. So Vijay, over to you to answer.
Congratulations, Vijay.
Thanks, Anthony. Hi, Haseeb. Actually, I'm asking more of a poker question because a few years back, I used to multi-table NL100 tables in PokerStars. I gave up and then I moved to blockchain. So my question first, if I may ask in poker, is like, how did you handle the variance and how did you handle, did you have like a strong backroll strategy to get up to this large number? Because, handling all the bad beats was not so easy. And yeah, that's my first question. Then the second question is in general, like you explained earlier about how you can't translate some of this into investing. But I thought like some like GTO, the game theory optimal strategies and so on, some of them we could actually use some of that to token investing. So just your thoughts on that.
Yeah, good questions. So on the question of how do you handle variance, this is a very, very broad topic that I could talk about for an hour, but the very short answer is that ultimately variance is about, it's about your own emotions. It's not really about the variance. It's about how you respond to that variance. And variance, for those who are not initiated, variance basically means like, sometimes in poker you win money, sometimes you lose money. And sometimes you win and lose money for fairly random reasons. It's not your fault sometimes. Sometimes it is your fault, but a lot of times it's just luck. And in the short term, there's a lot of luck. In the long term, that luck evens out. And if every time, you're sort of flipping a weighted coin, and if your coin is weighted, 53% heads, 47% tails, any given day you might win or lose, you don't really know. But over a month, you're very likely to win. And over a year, you're guaranteed to win. And so that's kind of what playing poker is like. But on any given day, you don't really know with any certainty, is this going to be a winning day or a winning week or a winning month? The longer the time frame, the more likely it is that you're going to win. But the harder it is to, on short time scales, it's very hard to know. Did I lose because it was my fault, or did I lose because I just got unlucky? So the answer, how do you deal with that? I think, it very much comes down to process. If you trust in your process, then you will have a much stronger foundation not to be concerned about the individual swings on a day-to-day basis. Most of the time when people are very frustrated with winning or losing, it's actually because they don't trust their process. It's because they don't really know, did I do the right thing today? If God were able to, look down on all the poker hands you played that day and tell you with certainty you made every single correct play, you would sleep like a baby. you would know with absolute confidence that like, okay, there's nothing I need to feel bad about. I did everything right. But the frustration is in the uncertainty and the lack of confidence about, did I do this right or did I let myself down? If it's all because of luck is actually much easier to handle than it being because of you. If it was because of you, then, then that's the thing that really gets your emotions roiling. And so, again, it's hard to take this as super actionable, but my high level answer is that it really comes down to your relationship with yourself and your relationship with your process in order to manage the emotions of the ups and downs. On your second question of, do things like, game theory and optimal bankroll management, the Kelly criterion, that kind of stuff, how does it apply into investing? On token investing, if you're doing sort of short-term trading, I think absolutely those concepts are very, very readily applicable from poker into trading. Poker and trading have lots of similarities, but I'm not a trader. I'm a venture capitalist. So as a venture capitalist, I make big, beefy bets over a very long time horizon where I get very small amounts of feedback in the short term, which is very unlike trading. Trading is you make very fast decisions, oftentimes relatively small amounts of money over intraday time cycles, and you get very fast feedback. So that's much more similar to poker. Poker and trading have a lot in common. I think a lot of great poker players have gone on to make great traders and vice versa. But venture is a very different skill set. In venture, you are much more lost about whether or not you made a good decision. And that's one of the nice things about poker is that, the cleanest type of game is something like chess. The moment that you make a decision in chess, you either get punished or you gain an advantage, right? And so there's almost never uncertainty about, did I make the right move or not? Was I unlucky? Was I, because it's this game of perfect information, there's total feedback on everything that you do, which makes it a very easy game on a relative sense to handle emotionally. Whereas poker is this game of relatively imperfect, relatively noisy, but real-time feedback, right? Like if I lose a hand, I don't know for certain whether or not it was my fault. It could be that I got unlucky, but I know immediately whether I won or lost. Venture is the worst of all worlds. Venture is like, I have no idea whether I made the right decision for years. And sometimes like they don't even tell you whether or not you made the right decision. It's like, okay, well, this thing made money or this thing lost money, but it made money for totally different reasons than why I invested. Or like my investment thesis was totally proven wrong, but we made money anyway, or we lost money. And like this guy who did the exact same thing made money. Did I make a mistake? Or did I make the right call? It's almost impossible to really get good feedback on it, which is one of the reasons why, in some sense, it's even more, it requires an even more rigorous intellectual foundation to be a good venture investor. So that's my answer to your two questions.
Yes, thanks.
My pleasure.
Awesome, Vijay. Thank you very much. Right, over to Nicholas from the Global FinTech Network, and which is a group of composite fintech societies around the world, and he is at the University of Hong Kong studying fintech himself. So over to you, Nicholas.
Hi, Haseeb, and thanks, Anthony. Thank you so much for coming today and just giving us this opportunity to speak to you. So my question is kind of a bit more abstract in the sense it's more about the general overview of the DeFi fintech market. I think at the moment, even though it is gaining a lot of traction and it's becoming a more mainstream thing, it's still quite a long ways away from general acceptance. So my question is, just as a general retail investor, as a person who's looking to get into investing into these sorts of areas, how do you go about defining what is something that I should be investing in, given that it's so young and so early into the industry, and that there are so many companies that are probably going to fail in the longer run? And I guess that kind of goes on to your sort of risk stance and that sort of stuff, but I'd love to know what your investment ideology is around those sorts of things.
It's a good question. I think it's a good idea to build your instincts very early in sort of, how you want to think about investing, particularly if you want to be a venture style investor. If you want to do trading or something else, I'm the wrong person to talk to. So wait until you guys bring on a trader and you can ask him. But yeah, on the venture side, I would say, if you want to sort of build your instincts as a venture capitalist, first thing is you need to have a thesis on the world. You need to decide where you think the world is going and what are the most important trends happening right now in crypto. And to some degree, the way that you do that is also by defining yourself in opposition to other things that people are excited about. So you say, look, I'm really not animated by NFTs. I think layer 2s are going to be big, and I think this thing is overhyped, right? And the first thing that I think the most junior people in investing are sort of too afraid to take a stance on different questions of, is this thing going to be good or not? It's only once you have a particular view of the world that that view of the world can inform what things you want to invest in and what things you don't want to invest in. And then, from there, I would say, you should make a relatively small number of bets such that, I mean, first of all, let me zoom out a little bit before that. First of all, you should only invest money that you're totally prepared to lose in its entirety, because especially early on in your career, most likely you are going to suck at investing, and that's okay. You are paying to learn the same way that you're paying your university to learn. But you'll learn a lot more in investing than you will at university. But the second thing is, I'd say you should make a relatively small number of bets, and you should monitor and come to understand what is it about the bets that you made that's making them work or not work. And if you just sort of buy 5 tokens on Coinbase and then just sort of wake up 3 months later and see whether they went up or down, you're basically going to learn nothing. And so if you really want to build your muscles as an investor, you need to develop a better sense of what made this succeed or what made it fail. Have some sense of the underlying mechanics that make things successful. And if you can, especially, try to talk to the team, spend time in the Discord, get to understand their product launches, like figure out what are they doing that's actually driving their core metrics. Having that kind of very structured and opinionated view into what's making things successful, that's what's going to make you a good investor in the long run.
Great, thank you very much.
Thank you very much, Nicholas. Right, over to Peter from the University of Aberdeen to ask his question. Over to you, Peter.
Hello, it's a pleasure to meet you. So I have 2 questions. So my first question is, what are your thoughts about AMMs, automated market makers? And in your opinion, what are your views on computational finance? And what are your thoughts about CDFI, decentralized finance? For example, what is Binance doing right now with their Binance matching? And so my second question, first of all, congratulations on becoming the 3rd largest validator on the NEAR platform. What is Dragonfly's vision about the NEAR as a smart contract platform moving forward? Thank you.
Okay, thank you, Peter. That was a lot of questions. So I'm gonna have to narrow that down in the interest of time. So I'll give you basically, here's what I'll do. I'll give you 1 sentence on each of those things. So it'll be a super abridged answer. For further reading, we have on our website, bcp.capital, you can find blog posts that we've written actually about half of the topics you mentioned. So first question I think was on, so you asked about CDFI, you asked about NEAR, you asked about AMMs, and you asked about computational finance. So I'll give 1 sentence on each.
Yes.
So AMMs, I think they're working right now, and they're clearly very, very well suited to Ethereum 1.0, but I think eventually they're going to get displaced by more efficient models. 2, computational finance. I'm not sure what you mean by computational finance. Do you mean DeFi, or is it something else that you're referring to?
I mean, as a whole, as a newly emerging field.
Computational finance.
In relation to DeFi, yes, in relation to DeFi.
Yeah. Long story short, I'm very bullish on it. I think it's going to be big, and it's an important space to watch. On CDFI, I think that right now CDFI is very, very actively explored, but I don't know how much staying power it has. I think it's very much right now a product of this market cycle that people think they magically make money by creating DeFi things and doing DeFi things. It's kind of the same thing as like the ICO boom. In the ICO boom, people thought that ICOs magically made money. And in general, once the ICO boom was over, that was no longer perceived to be the case. And right now we're kind of going through the same thing with yield farming and AMMs and whatnot. But there's relatively little true value creation that I think we know for certain is happening. So I think that'll take time to really see what the end game is there. On the last question of NEAR, I think NEAR protocol is great. And yeah, read the blog post if you want to know more about NEAR.
That was speedy answers, getting them out. Thank you very much, Peter.
Actually, can we get a woman? Because I don't think we've had any women speak so far. Are there any women here? I see a question from Pooja.
There's a question from Pooja, which is So blockchain as a technology is still emerging as a tool. It's not quite mainstream yet. So do you think that kind of big network providers such as IBM have a role to play in allowing blockchain to become a more mainstream technology? And will that be the same situation for crypto, that the existing big players need to get involved and kind of support it in order for it to have that effect?
Yeah, that's a very messy question. So it's funny you say that, because there was a recent report that IBM actually was massively downsized their blockchain team because basically they, for lack of a better term, they just kind of sucked and they weren't able to do very much. So I remember in 2017 when there was this big movement that Bitcoin and Ethereum and ICOs were this big splashy sideshow, but the real thing was that now enterprises were going to use blockchains. And this whole narrative was mostly created by consultants. Basically like the sort of IBMs, the Concentras of the world, basically pumped out kind of blockchain marketing materials to their consumers and their partners, basically claiming that blockchain was going to solve every problem under the sun. So any arbitrary trust problem, whether it be accounting or supply chain management or title tracking or IoT or data management or whatever, all of this stuff was magically going to get solved by blockchains. And fast forward 4 years later, and look around you and notice that none of these problems are solved by blockchains. And I think the takeaway from that is one, never trust consultants. Two, generally speaking, the way that you're going to figure out what a technology is actually good for is look at what is it actually being used to solve problems for. As far as I can tell, there was a great report written by Cambridge, I think it was in 2019, that basically it's like a huge survey on enterprise blockchain adoption around the world. And basically what they found is something like 80% of blockchain enterprise projects failed. And the reason why they failed was because they didn't actually solve any freaking problem. And if you look around the world, what you mostly see is that the enterprises that are using blockchains are basically, for lack of a better term, their solutions in search of a problem. And right now, the one problem that we can say unequivocally that blockchains have solved was the one that they were actually invented for, which is to create decentralized money. That was why blockchain, the core thing of a blockchain was originally invented. It was originally invented to create a thing that was never allowed to exist before, which is a type of money that is not controllable by anybody. That was a completely new thing that nobody had ever been able to create until we created a blockchain. And since then, the only real things that have worked have all followed in the footsteps of that original invention, right? Bitcoin was just money. It's just send money back and forth. Ethereum generalized that to, instead of just money, now it's contracts over money, right? So it's financial agreements on top of just the ability to send money back and forth. And then after Ethereum, what was the next big thing that worked? It was ICOs. And what are ICOs if not, fundraising, capital formation, the joint stock corporation, right? It's companies. It's getting together and working on a joint venture. And then all, what we call DeFi. DeFi is the further continuation of that. It is, okay, once you have capital formation, once you have governance and decision-making, what else do you need? You need lending, you need borrowing, you need trading, you need exchange, you need settlement, you need insurance, you need derivatives, all this universe of financial things. It all started with Bitcoin, of just being decentralized money. And then we got to decentralized contracts, decentralized capital formation, and now decentralized everything else. And I think you should take that very seriously as an indication of what is the problem that blockchain actually solves, and what instead is the narrative, the cloud of narratives that's following behind blockchain, that's being invented by the people who are likely to make money off of selling this story to other people. So now to get back to your specific question of what role do network providers like IBM have to play in allowing blockchain to become mainstream? The first thing is, I think, in some sense, not much. You don't need IBM on board for crypto to be really valuable. You can see that today. IBM's not on board, and Bitcoin is worth 45,000 a Bitcoin. But in another sense, it of course does need some of that infrastructure, because you need to have some bridge for the old world and the new world to interact. And for a long time, that bridge is going to be very, very necessary until more and more infrastructure becomes native to that new world. Now, it doesn't need to be IBM. If IBM doesn't get it, then screw IBM. Somebody else is going to get it. But generally speaking, I do think you do need these bridges. You need traditional companies who understand the value proposition of decentralized technology. But you don't need them as gatekeepers. You need them rather as bridges. That's the way I'd answer that question.
Awesome. Right, we've got about 5 minutes left. So let's see if we can do a bit of rapid fire. We're going to take 2 live questions at once, and we'll get Haseeb to answer them in kind of parallel. So,
only one actual question per person, though.
Yeah, this would help. Fewer than 4 per person would be ideal. Fraser and George, do you want to ask your questions? Fraser, I'll let you go first. Fraser is from the University of Edinburgh, by the way.
All right. Okay, I'm worried this is too broad now. But I've heard you talk a lot about effective altruism. And I was kind of curious as to how you've kind of positioned yourself to make a difference in the world. Like, what was so appealing to you about like the technology sector and cryptocurrencies? And also, one more question: how was your journey to being a vegetarian going?
That's a really good question. That's such a good one. We'll go to George.
We're going to cut you off with that first question, but I will answer it.
George as well, so we can answer them in turn. It's going to be completely different, isn't it? Now, go on, George. Oh, you're muted, George.
Just following off from what you're talking about with sort of decentralized money, is how do you think central bank digital coins might impact the space, like a widespread adoption from like US, UK? Like how might that impact the space?
Good luck with this, Haseeb. This is like 2 completely different.
Yeah. Okay, let me go in reverse order just for the sake of continuity. So central bank digital currencies, I think. I have a relatively minority view on this. I would say that I think central bank digital currencies are basically totally uninteresting. And I think it's kind of an artifact of the sort of, what I was moaning about to Pooja, about this like consultant sort of cloud of this aura around blockchain, that these things that are relatively tangentially connected to blockchains have somehow a blockchain aura and they get brought into the same conversation, when I think they really have almost nothing to say to each other. So what do I mean by that? Pretty much every central bank digital currency today doesn't use a blockchain. So I'm quite familiar with the architecture of DCEP, which is the Chinese central bank digital currency. DCEP doesn't use a blockchain. There's no blockchain anywhere. There's no validators, there's no permissionlessness, there's no anything. The only part of it that they borrow from blockchain is they have public keys and private keys, and for some reason they have UTXOs. But other than that, there's absolutely no connection to a blockchain. It's not permissionless, you can't write smart contracts, you can't anything, And in fact, the only way to access DCEP is actually through the banking system. You have to be onboarded with a bank in order to get access to the DCEP product. So most of the time, if you look at most of the actual proposals from these central banks, they do not include any of the disruptive aspects of cryptocurrencies. There's no programmability, there's no openness, machines can't own currency, none of that stuff is there. It's basically just a newer, faster backend for the central bank. And newer and faster backends for central banks are great. That's a really great thing. I'm glad they're doing that. But it's more akin to like UPI in India, which if you're not familiar, UPI in India is basically this real-time gross settlement system that allows people to settle directly on the ledger of the Central Bank of India. It's great. Big improvement over their previous architecture. It has nothing to do with crypto. It couldn't even have less to do with crypto if it tried. And I think if you actually look at the substance of most of the central bank digital currency proposals, they sort of co-opt the language and the kind of aura or gestalt of blockchains, but they basically have nothing to do with it. It's purely just a different database for the central bank's ledger. So that's my answer to your first question. And then Fraser, to answer your question about effective altruism, I will very, very briefly explain what effective altruism is before I answer your question. So I'm a big proponent of this movement called effective altruism. And effective altruism is this idea that the right way to do the most good in the world, not the right way, but I think the way that I subscribe to do the most good in the world, is basically to be very rigorous and call it scientific about trying to figure out what actually among all the things that I can do has the most positive impact, as opposed to just sort of trusting your gut or just kind of doing what the first thing that comes to mind or the first thing that seems like a respectable or nice thing to do. Effective altruism takes the tack that actually, no, doing good in the world is really, really important. And we want to be very careful in the same way that we're careful about all the other important things we do in life, right? Like if you're running a company or you're distributing vaccines or you're running running some kind of a military project, right? You take evidence and very, very high intellectual standards very seriously when you're trying to make good decisions in all those enterprises. But somehow when we think about doing good, people like to turn their brains off and just sort of like, soft fuzzy, oh, that sounds great. Yeah, let's do that. And I think that's totally backwards. It should be the other way around. In that, in fact, in doing good, we should be the most rigorous of anything that we spend our time on. And so that's the underlying philosophy behind the effective altruism movement. And if you take that idea seriously, there are a lot of relatively counterintuitive ideas about how to orient your career that come out of this central idea behind effective altruism. And so what I do, I learned about this actually not long after I quit my poker career. And that was what convinced me. After I quit poker, I really didn't know what I wanted to do. I'm actually, believe it or not, it might be hard to believe, I'm actually not very motivated by money. When I quit my poker career, I actually gave away most of the money that I'd made. I made quite a bit of money at a young age. And when you make a lot of money very young, you realize pretty quickly that you notice that there is no relationship between money and happiness. You look at a lot of people who have a lot of money, you look at a lot of people who have no money, and there's just absolutely no difference. The amount of unhappiness and frustration and ennui in the world has more to do with yourself and your relationship with yourself and your friends and your community than it has to do with the amount of money that you have. And so for me, I just wasn't very motivated by money. But I realized, actually through my engagement with effective altruism, that by making a lot of money and donating it, you can actually make a lot more impact than you can doing a whole lot of other things that you could possibly do yourself as just one person in your own community. And so I became convinced that the most impact that I could have personally would be by going into a high impact career and donating a lot of the money that I make to charities that I think are going to really make a big difference. And so ever since I started in Silicon Valley, I came out here, must be 7 years ago now, 6, 7 years ago. Ever since I first started making money in Silicon Valley, I've been donating a third of my income to third of my pre-tax income to high impact charities. And I continue doing that today. And I hope to continue doing that as long as I possibly can. And so that's a big part of what motivates me to keep doing what I'm doing in the tech and crypto industry. And it's something that doesn't appeal to everybody, and it's not the way that most people necessarily choose to live their lives. But for me, it's something that gives me a tremendous amount of, call it purpose and conviction about, there are times when, crypto is a weird industry. And there are a lot of times that I'm like, what am I even doing here? Am I just completely wasting my time and energy on a space that's like this? But that to me is my North Star. It's how I know that no matter what I'm doing, I know that I'm making a difference and doing something valuable for the world. And that's incredibly meaningful to me personally.
Awesome. Great question, Fraser. I'm conscious that we have reached the end of our allotted time. I know this could go on for a very long time, but I'm conscious we all have hard stops. So Haseeb, that was absolutely fantastic. Probably my favorite AMA we've done. And I think it touched on probably deeper issues than we normally get. We normally get stuck in the superficiality of crypto, as you kind of touched on yourself at the end there. And it's kind of nice to take a little bit of a step back and look at the purpose, quite frankly, and some of the philosophy behind things we do and should be doing, quite frankly. So thank you so much. Thank you for your time.
Thank you. This was amazing. And thank you for all the great questions, everybody.
Awesome. Well, everyone, students, hackers, everyone in the Encode community, thank you so much for coming. We'll get this video up with the transcript as soon as we can. But Haseeb, again, thank you so much and have a lovely evening and yeah, a great week in general.
Great. Take care, everybody.
Thank you very much. Bye.
Cheers.
See ya.